Accounting software firm MYOB is set to become the latest Australian company to fall into foreign hands. MYOB's private equity owners are preparing to sell the business, and British-based Sage Group has emerged as the most likely buyer. At around $1.3 billion, it will be Australia's third biggest private equity sale. Simon Palin has more.
London-listed business software group Sage has confirmed that it's got its Australian peer MYOB in its sights.
For both parties it's a big deal. For Sage it would be something like 10% of their market cap, so it's a very significant strategic move.
If the deal goes ahead, it could be worth about $1.3 billion. In 2009, MYOB was bought by private equity firm Archer Capital. It's rumoured to have been looking to sell it now for some time.
Achieving exits has been quite challenging. I think a lot of private equity firms have, to a degree, relied on there being an IPO exit as a possibility. We're in an environment where that has been very difficult for a time. It's going to remain difficult. I don't think that's going to change. And finding a good trade buyer is the obvious solution to that.
I think the current volatility on the stock market makes IPOs of concern, but even so, anybody looking to exit a portfolio company from a private equity portfolio at the moment would be looking at both options. They'll look at an IPO because that still might deliver the best result, but they'll also look at a trade sale, and as we've been seeing over the last 12 months, they've been the ones that have turned out to be the best answer.
Merger and acquisition activity more generally has been a lot slower than what was expected at the start of this year. 6 months ago, 2011 was on track to be the best year for takeovers and IPOs since 2007. More recently, boardroom caution has been heightened by renewed fears about the US recovery and Europe's debt woes.
Companies are looking to make strategically significant acquisitions, but they remain very cautious. Generally, they have the funding to do so, but they are looking very carefully at what really makes sense and what doesn't.
The strong Australian dollar will also have put some foreign suitors off, but some believe the sluggish M&A activity of the past few months means some big deals could be around the corner.
There is a bit of a build-up in the pipeline as quite a number of investments were made some 3-4 plus years ago. There's obviously a bit of a pipeline of exits that are due from now onwards.
Nigel Lake says neither the carbon tax nor the mining tax is likely to deter foreign investment.